Hi everyone, and welcome to Snowden Report on Monday, the 20th of March with me, Rich Prayer Market Analyst at Asset Markets. We've got a relatively, first of all, dollar negative start to the day, but also mild risk off as well. So starting off the dollar negative move, these sort of downside run on the dollar that we've had since the Fed meeting continues really. And that's coming as Treasury yields remain relatively depressed, don't they? I suppose on the 2-year and also the 10-year, and that is certainly playing into the dollar. We had a move lower on the on Wall Street markets on Friday, marginal move lower, but I think the main sort of driver of corrective move today has been sort of this G20 meeting, which at the weekend the communique didn't sort of come out and go against any protectionism drive, which would suggest that Donald Trump's sort of views on global trade are starting to filter through into that G20 outlook. And that's not good. Generally, that sort of tends to lead to a bit of a safe haven shift, and that's what we're seeing today. We're seeing gold up, we're seeing treasuries up, we're seeing the yen stronger as well. So that sort of is the general theme, I think, today. Nothing too significant in terms of direction, mind you, but still, that is what we have. There's not a great deal of outlook, economic calendar events to really that we need to consider. Nothing really at all, to be honest. Apart from the interesting increase still in German inflation, 3.1% on the producer prices. So that is going to be impacting, I think, going through. So watch out for German inflation on the CPI to continue to rise as well. However, nothing apart from that. You do have Charles Evans speaking today. Now he's a bit of a leans dovish on the committee. And he's going to be speaking today. So he sort of starts a run of, I think, 7 Fed members that are due to speak this week, including Janet Yellen. So it will be very interesting to see how the market reacts to these speakers, considering the moves that we saw from the Fed last week. So that takes me to my chart today, which is the Euro Sterling. Now we have had this rally on Euro Sterling in February, rolling over. Look at the number of bear candles that are beginning to rack up. We're seeing lower highs, lower lows. You saw on Friday a close at 86.62, which is arguably below that 80. Well, it is at 86.64. That sort of now produces that 87.59 level to be a lower high. But also look at this 86.50. This is a pivot level on this chart. Which has become important, and again in the last few days 86.50 seems to be supportive. Not yet broken to the downside. If it does break to the downside, I think we're going to see further retracement back to possibly towards that 84 figure level, because it would really start to put the pressure onto the downside. You've already seen the momentum indicators rolling over. Stochastic sell signal, RSI below 60, having been above 70 previously. And the MACD line is also close to a crossover, similar to the sort of situation we had back in January, where we saw the continued corrective move. So this could be the start of a corrective move on Euro Sterling, and I think it could all come from that 86.50 level, which, as I said, has been holding. But you can see these hourly momentum indicators falling away on MACD lines, RSI, and negatively configured now on the MACD lines, as these lower highs get posted, and you're now seeing all the moving averages falling in bearish sequence as well. So it would suggest that selling into strength is the way to play this. So you had that latest reaction high today, 86.92, before rolling back over again. And I suppose whilst that 87.38 level of Friday's high remains intact, I'd say that you're still looking pretty corrective really on this chart. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.